Nomad Podcast.
Cool. So, hey guys, and welcome back to another episode of Nomad Podcast. And today I have Patrick joining me. And Patrick, I normally start the episode with people sharing their rabbit hole stories and how they got into finance and what they even do in the Bitcoin and finance world. So,
Sure.
would you like to do that?
Yeah, 100%. I'm Pat Wood, President and CEO of DelphX Capital Markets. We're a publicly traded company up in the States and in Canada. I came into finance, Janice, my story is about 30 years old, back in Canada. And I started back in the day as an old-fashioned stockbroker, building large portfolios of bonds primarily. Credit somehow just seemed to be my fallback at that point. Worked for large Canadian banks, independent dealers, etc. Then I moved into separate roles doing things like investment banking, investments, so institutional sales type stuff. Really wore pretty much, I think, every hat you could in finance. And I guess it was back in 2013 or 2012, I started my own investment bank, kind of merchant banks, structure, but focused toward raising capital for smaller companies, investing alongside, helping in the creation of some of these companies, and most importantly, like I said, taking them public. And one of those companies is DelphX Capital Markets, which we were the advisor to the transaction and the structure of the deal back in 2018. Took the company public. It was originally set up as a structured products type company in the credit markets. But then, the original management team blew things up, which is a very common story in these startups, as you know. And then I very reluctantly took over at the helm, a few years ago. And what we did in that time is we really changed this company around to the point where we thought that, the one area of the market, and credit in particular, that was our OG focus, was kind of it was the hedging side of the market. No one was really focused on hedging. Obviously, in 2008, CDS and other instruments kind of blew up, and we thought, okay, what if we designed a new product for the credit markets, which kind of addressed things they weren't looking at, which was credit market risks, specifically when downgrades happen in their underlying corporate bonds. So we developed that product, and we have that product still being evaluated by large institutions, namely life insurers in the States and in other places, and we have hedge funds backing it, et cetera. But my background with crypto kind of started in 2013, I believe, and in 2013 I attended one of the first consensus conferences in New York, and it was I think there was only a couple hundred people at this thing. No one really knew what was going on. I actually still have some old coins. They were selling like actual physical coins back then, where you could load some BTC onto them. That's kind of cool. And I really understood the dynamics of blockchain and smart contracts. In fact, I even took a few companies public based on that, that knowledge back in the day. And so with that kind of, always kept my interest, and certainly, some of my focus on the technology, the underlying structure behind crypto. And so like I said, blockchains, layer ones, layer twos, that kind of stuff, just following it kind of. I mean, I'm definitely not the smart guy in the room, but, just staying on top of it, of course. And when we saw crypto treasuries in particular start and become a very big saturated market, and in fact, one of the reasons that we led ourselves to the crypto space was because we were approached by a large private equity group to do a treasury with our little public company shell back in the early part of the summer, and so really opened our eyes to the fact that this was a big market. It wasn't just MicroStrategy and a couple of other guys doing this. It was becoming huge, and so it got our interest level to the point where we started to dig in deep. And dig in deep how these companies are actually funded, and where's the leverage, and is there an intrinsic risk in the system. We identified that there's a massive freaking risk. It's insane. 2 weeks ago, I was in New York at a conference. Michael Saylor was in front of me talking about his credit structure and how he's funding this. And I swear to goodness, I was at a Lehman conference in 2007. I heard the exact same thing. It's no
Yeah.
different. And so that kind of math, it really, you realize where you're at. Now, I love the underlying structure of crypto, specifically BTC. I think it's here to stay. Clearly, it is, and it's probably going to do great. But we analyzed the actual hedging, structures that are out there. We could come up with a few things. Obviously, OTC options on Deribit and other things. People can buy them, they can trade them. It's for the small kind of the person sitting there, in their in front of their computer trading this stuff all day. Awesome, good for you. IBIT, IBIT is another great instrument. And I think actually IBIT has taken over. So hedging that ETF itself and buying puts and calls, et cetera, on that structure, it's kind of interesting. But we look at things like collateral and security because our
Yep.
product is focused on the institutional investor, right? We're looking at the fund, the treasury that has, let's say, at least minimum 100 million BTC, but who want to and who have a view to it, which is different than everybody is seeing right now, and that is to preserve capital and to make that treasury solid. And treasury management 101 is protect your underlying volatility. And so collateral, security, et cetera, is a big thing. Yield and the carry, those types of things kick in.
But yeah.
Liquidity, counterparty risks, institutional fit, all those things. We kind of came together and we developed our product. And what we have now is we have the first fully collateralized product, which takes out any counterparty risks, which is specifically designed toward an institutional investor, institutional holder, institutional treasury fund, et cetera, to the point where we have, I think Wall Street's first traditional finance product for hedging in the crypto markets. And so we're super excited about that because, like I said, we analyzed everything else. Sure, for the layperson sitting at home, or in their office trading this stuff all day, and a lot of guys do, it's like, okay, great. But you're dealing with, a very, very retail product. Ours is much more focused toward the institutional investor, which, like I said, brings in, the safety net people into your treasury or your fund. And those are the insurers, the pension funds, the large institutions and, basically family offices, where they want to know that there's transparency and safety in the underlying treasury. So we designed a product that, like I said, backs off of our original credit market product. But it's the first kind of, from what we've seen, it's the first traditional finance product to hit the crypto markets. So that marriage between the two is really interesting. And to be quite frank, when we've been, spending years developing our credit market product, getting our teeth kicked in and lied to and cheated by people saying they're going to go with it and then they back off, et cetera.
Yeah.
It's actually kind of, it's enlightening for us and very exciting because, we're entering into arrangements and partnerships and things like that with others who immediately saw value in this and want to be aligned. And most importantly, we'll be starting transactions, which are kind of coming together as they are now, which has all been press released, by the way. So it's not like, this is brand new knowledge, but to be quite frank, being a small little micro cap fund, or for stock, nobody's paying attention to us yet. But yeah, that's going to change for us, we think, pretty soon. So there you go. I'll stop there, take a breath. Janice, go ahead, ask me some questions, fire away.
Okay. That was a long introduction, but it's fine.
Okay.
Thank God I'm a good listener. So, well, my first question then for you is, how was the process then, like for you guys, especially like from, you know, basically how did you guys even start? What was the main goal at the start as for you, like a person, like was it just some rational decision? Oh, let's do it, or was it also like maybe, hey, we saw it, like with others. Example, let's take Mike Saylor, for example, and what he does, or what other guys do in the space, and that
Yeah.
you thought that, hey, let's do it as well. Like
Yeah. I mean, the hedge was only because we were listening to guys like Saylor and others,
Mhm.
and we were seeing what was coming out in the market. And we don't actually have a view on where things are going to go. I mean, I think personally, things are going to continue being great. I think the supply demand equation really kicks in at a certain point too, where
Yep.
that will be a guide on where prices eventually go. But I think one of the biggest problems, obviously, is the leverage and how much leverage people are using right now. And so I think that has a negative impact, and that could have a bad, kind of effect. And so when I look at 2018 and 2022 and some of the moments before that, when, like something like BTC was off 74, 64%, you can't take on
Mhm.
that kind of risk if you're a conservative investor or institution. You have to
Yeah.
protect and mitigate against that. And the great thing about BTC and other cryptocurrencies is their CAGR is so immense that if you have to, give up some return off the top, you're still crushing it. So like the CAGR on BTC was 84% for the last 10 years. Had you put on our protection and an assumption of about 8.5% a year of protection cost, you would still have a CAGR of 69%. However, in 2018, 2022, your max loss was 15%. Most people can
Mhm.
handle that, but 74, 64, they can't. So that's how we came into it. We didn't just say, hey, let's spray and pray type thing. We more kind of thought like, hey, let's design something that doesn't exist, that's a standalone, but that actually fills a need that no one is filling right now. And so that's how we kind of came to this.
Okay. Well, let's go like to one of the, I wouldn't say complicated questions, but
Sure.
the counterparty risks, that you or that the market generally has. Like we have seen it with companies like FTX, or Celsius, Um, what are your thoughts on how US banks and especially banks in Wall Street, like the big guys, how they, you know, like their role in that, how they control the markets and how they play maybe a big benefit also in the market?
So yeah, there really are two ways and two things that people are normally doing right now to buy. Let's just call it straight up put options on crypto right
Mhm.
now. Risk,
Yeah.
which is risk management. You got OTC options. Okay, OTC options. You have tons of counterparty risk. You have no idea who your counterparty is. You have no idea what their balance sheet looks like and whether or not they are fully funded enough such that if there is a bad moment,
Yeah.
do you really know that the collateral is there? Our product takes that collateral, the maximum amount we invested in U.S. Treasuries, and it's just held in U.S. Treasuries for the tenor of the transaction. So as an institution in a large group, you're very very comfortable. You've got basically something that's much safer, that's much more visible and transparent. And that doesn't exist in OTC options. The other one is IBIT. It's a big
Yeah.
ETF. Everyone's trading on that BlackRock sucker. And you got the Options Clearing Corporation, backing that a bit. And it's very liquid. It's exchange traded. You can't go wrong with it as a small guy. But let's face it, it doesn't carry the same characteristics as our hedge. And what makes our hedge
Yeah.
one of the most important things out there is we have for the carry, which is what somebody selling that protection will do. They're capturing the yield on the treasuries because they're like I said, that collateral is held separately in a treasury. You don't have that in a separate product like the IBIT and those options exchanges. So that's a big thing. But it's also the fact that this is a very customizable product. You're buying options on an exchange. You're relegated to certain strike prices, exercise prices, all that kind of stuff.
Mhm.
This is a very bespoke, traditional finance structure that Wall Street hasn't actually brought out yet, and I don't think they will. Their trepidation and their lack of innovation in Wall Street has been pretty strong over the years.
Mhm. And why is that? Why is that, do you think?
Old people sitting in desks who are waiting for one or two more bonus cycles and saying, you know what, we're not going to, and I hear it all the time, we don't have the bandwidth. It's just an excuse for innovation. It's an
Yeah.
excuse for actually, doing things right and building new products, new solutions. So a small little, kind of pisher company like ours, we can step in and fill that gap. Thank goodness. So
Okay. Okay. And then let's also go to the adoption wise and institutional adoption wise. What
sure.
types of institutions like funds or
Well, that's a great
any
question.
type
Yeah, yeah.
of company are showing like the most interest in like your products and generally like in the markets as well.
So our target market are treasuries,
Hmm.
are large holders. So think family offices and others who have large holdings of crypto, and then of
Yep.
course funds. And in fact, we haven't put this out there yet, but we are in discussions with someone who runs ETFs about building a separate, ETF series around this hedge. And the reason
Yep.
being, Janice, is the fact that 95% of crypto investors are not investing in crypto. That's our philosophy. So
Hmm.
that 95%, the trepidation is there because they know it's a volatile asset. If you structure yourself as being different and running a treasury which benefits on the growth of the underlying price, but has a hedge in place, and that is a good steward of that treasury to the point where you say, look, I'm not seeking alpha. I'm not going to stake this thing. I'm not going to lend it out. I'm not going to do all this other stuff. I'm just going to own the treasury. And, my philosophy as the treasury manager is that it's going to continue to do well as it has over the last, 15 years type thing. Um, and if that's your goal, then if you offer a hedge and something that's fully transparent and guaranteed to be there, I think you bring in that 90. Well, you don't bring in the whole 95%, but you bring in a big group of conservative folks who want to be in this, who are not there yet. And to be quite frank, I think you do cannibalize some of the other guys out there. And when that time comes, if there is a time where there's a big sell off, and if you're only off, a certain amount, and you've hedged your portfolio, I think your win is massive. You cannibalize everybody else out there. Your results just look phenomenal, while everybody else looks, pretty bad and beaten up at that point. So I think you get a migration and a cannibalization of some of the other things out there. So does that make
And
sense?
what are
Do you
Yeah,
kind
it
of
makes
get it?
sense. Yeah,
Okay.
I get it. But what are still like the risks, with regards to that? Because from my mind now is like, what if people don't get the financial system? Because that's the most common case. People don't understand finance. They don't understand
Sure.
capitalism.
Yeah.
They
Yeah.
My generation especially, sorry for saying like that, they're all freaking communists. They think that socialism, communism is like the answer to the bad
Right.
white man in power. So
Right. Right. Right.
what are those are kind of still some risks, but are there also other risks? And what are your thoughts on that?
So okay. So that's the the guy you just explained is not our target market. Like
Okay.
that's not where we
Okay.
want to go,
Then
because
case
because
solved.
because I mean, to be quite, I'm like young people like yourselves. Not Yeah, I guess I kind of am an old loser, but young winners like yourselves, you guys, you have a specific way of doing things. You already know how you're going to manage your cash. You guys are very, very adept into the OTC markets. All these things that go along with crypto. That's not our
Mhm.
target market. Our target market is kind of like the old fogey, like myself, the smart steward of money management, someone who's a brilliant asset manager, who
Yep.
understands, hey, I can build a fund, or I can build a structure around owning crypto. But if I'm hedged, I'm bringing in like-minded people into my bailiwick. And to be quite frank, I mean that's the bulk of the market. That 80% of the market, that institutional market, that's where we're focused. And it's funny. So one thing your listeners should understand in finance, you got 20% of the market being served by 80% of technology, of the people marketing products and services. The 80% is only serviced by 20%, and the 80%, that's our market. That's where we're focused. So it's like I said, it's a different view, right? And it's a different take.
Yeah. Okay. Now, I have another question on risks. So that might be too complicated, but I maybe you can answer it anyway. So, how does the 15% protective put into the QCS balance the trade-off between the downside protection and the preserving in Bitcoin's upside potential for institutional treasuries function? How does that work? Could you maybe share some detail on
Sure, the
just
mechanisms.
for
Yeah, I'll do it at a very high level, but because it is a very high level thing, there's nothing really
yeah.
magical about this. It's a really easy structure. So if you're a treasury and you want to offset your downside, you're probably going to set the level at a 15% below spot. So if Bitcoin's trading at, let's just say it's trading at 100,000, totally theoretical. You're okay if Bitcoin drops to 90,000. You
Yep.
realize that historically, 3-4 times a year, it's going to do that.
Yeah.
The size and the magnitude of those drops is pretty extreme sometimes. So 10%, that happens all the time. Like I said, 3-4 times a year. But if you are, looking to protect against a 2018 to 2022 situation, you worry that, oh my goodness, if it goes below that amount, and if I get really spanked, I need to preserve that capital. So for example, I know it could go down 15%, but anything below 15%, that's what I want to hedge. And that's why I want to protect myself, because if it's, a bad market, I don't want to experience that kind of that abuse. And so at that point you say, look, I'm going to go to these guys at DelphX. I'm going to buy, I'm going to talk to, basically we're a broker dealer in New York, we're a placement agent. We fill all this role, and we're the issuer of these two new securities with US Bank as our custodian. They manage all the cash flows in the structure, etc. And
Yep.
and so anyway, you come to us and you say, look, I want to offset 100 million here. And so I got 100 million BTC. I'm going to pay for some protection. I'm going to do it every year because I think that's really smart. And so I'm probably going to pay on that 100 million of protection, maybe $7 million. And so I'm going to take $7 million. It's going to go to US Bank, who in turn gives it to a hedge fund. The hedge fund says, okay, you know what? I'll take the 7 mil. That's a fair trade to me. I'll take that 85,000 or 85 million in this case. I'll give it to US Bank. They're going to buy a treasury, which will roll over every 3 months. I'm going to earn interest on that treasury, and together with that premium, I'm part of this trade now. We basically are going to do this. I've
Yep.
basically hedged you. Your collateral is transparent, and we act as, like I said, issuer, placement agent, and broker dealer on the transaction. So we are simply, we prepare the paperwork, we put the two parties together, and then everything's done, and we're out of it at that point. Everything goes
Yep.
to basically the custodian, who does the calculation agent stuff, all that other kind of good stuff. But in that process, BTC sinks down, let's say down 50% that year. Well, the gap
Yep.
between 15% and 50%, that 35, that's $35 million that gets paid to the treasury or the guy offsetting the risk at that point. And then, like I said, the structure is over. What's interesting about this is, because it's a traditional finance structure, we haven't tokenized it or done anything like that yet, but that's definitely our intent. Playing alongside the SEC and whatever their regulations, kind of wherever they go.
Oh
Um,
yeah.
we definitely want to play ball with that. So, we're working with another company, I think, and we'll announce things soon about, heading in that direction, because that's going to be really exciting. If you then tokenize this, and you make it very, very easy to do, because right now it's all paper based. And so taking it to that new world, of private placements being tokenized, oh my goodness, we would love to be in that space. It's a no brainer for us.
Okay. Then
Does
how
that
do you
make
also
sense?
see?
Does that kind of,
Yeah,
okay?
absolutely, absolutely.
It's
Then
as
how
simple
do you
as that,
also
Jake.
see? Yeah, well,
Yeah.
I guess it's always simple when you understand finance. I assume that's like, if you know finance, then nothing's like, surprising to you. But anyway, so how do you see then the QCS influencing like the broader institutional adoption of Bitcoin, especially now that you mentioned the SEC and all
Yeah.
these government institutions, like also stabilizing the market and its volatility, especially with Bitcoin, because Bitcoin is volatile, and
Yeah.
crypto in
Yeah.
general. But how do you
Yeah.
see
Yeah.
that playing out?
Yeah. So QCS, which is, it's an abbreviation for quantum crypto securities. That's our product,
Mhm.
and not our product. Let's call it a service, because it really is a service. But
It's
um,
it's it's your child. Let's say it like that.
it's something we offer, right? It's a hedge. But
But not that you guys all for children, right? That's
no.
like off the table. Okay. So
Well, I mean, they could be. I mean, if they run an institutional fund or something. I mean, I think half the people running treasuries right now kind of are behaving like children.
well,
But
kind of, yeah.
that being said, that being said, I think introducing traditional finance products to crypto is really great. I think that broadens the market, and I think it strengthens the market in a big, big way. Because TradFi and DeFi just they haven't met yet, and until they do, you're going to have a reluctance of people who are used to TradFi stepping into the DeFi place. But I think if you bring the two of them together and combine them, I think you end up with a real win. And I think it further strengthens the actual structure itself. And I think it strengthens the entire environment. To be quite frank, I think it's a big plus for both. And it always takes small companies to kind of start this stuff, and then eventually the big guys step in, and they
Yeah,
start to do the same stuff, because it is, there's I mean, we're regulated by the SEC in everything that we do, and obviously
obviously, yeah,
FINRA in the States. And so you've always had to play ball with those rules and those regulations. And let's face it, those types of organizations, it takes them a while before they give you, kind of they never give you a carte blanche to do what you want, but where they say, okay, we're not, this is within our within our goalposts of what you're doing, type thing. So I think
yeah,
having it come together now, I think is really, really cool, and I think that will really benefit the overall segment quite well, and make it more secure, like you said. I think it builds in a layer of extra trust, which
yeah.
allows, like I said, that 95% of people who aren't buying it to come in and start buying it and thinking about it. So
I mean, also the whole situation with ETFs. I mean, I had friends which were like against ETFs. I'm like, well, what if a dude which doesn't get Bitcoin buys a Bitcoin ETF from like a company and through
yeah,
that gets into Bitcoin, or generally like finance,
sure,
that's
yeah,
always a another way instead of going the traditional, down the traditional rabbit hole, buying Bitcoin and then spending it on stupid stuff and then realizing, oh, I should have spent it. But
yeah,
anyway, you mentioned the big guys before, and I have to bring in the Fed. Recently, Jerome Powell lowered the rates, and there's now this big question because in the upcoming days, I think like 6 days or 5 days, there will be another meeting, right? And my question now to you guys is: do you think that he might lower the rates again, or will he keep it, or does he go like completely mad and raises the rates again, which would be like stupid, but you never know because guys like
so
he are basically like have a big influence on the market. So thoughts of that?
I mean, look, so it's so funny. I was in New York the other day, and my friend said, "What do you think is going to happen with the price of Bitcoin?" I said, "Well, I think it's going to go up." And I said, "But it could go down." And I said, "At the end of the day, I don't know." And
Yeah, you don't know.
he said, "Hey," he's like, "Dude, he just did basically just did a triangle of basically nonsense." And anyway, so he called it something else, but it was like along the lines of BS. But he said, "Look, I don't know what's going to happen. I think rates should be lower. I think where the Fed has rates right now is way too high. And to be quite frank, I mean, you look at some of the fundamentals and the dynamics in the market at play right now. There is inflation out there, but when you look at where things are kind of leading, and always have these leading economic indicators which kind of lead inflation. Inflation, follows suit 6 to 12 months after. And so right now rates should be significantly lower because you've got a housing market that's no matter what the numbers say, it's a slowdown of massive proportions. Prices are way too high, so people, a lot of Americans and others
Yeah.
rent, so rent prices they're dropping like a stone in most markets, and so that alone is a big driver of spending, because people spend a lot on that kind of stuff. And then you look at employment numbers, which are soft. You go across the gamut, and it's pretty it's pretty dicey. Listen, man, you had a 1 million job revision lower number after President Trump took his office and kind of cleaned the decks of it. That's a huge drop. That's not been factored into, I don't think that's in the Fed's thinking. And I think there's some political drivers there too. That's why they're holding out, and I don't think that's fair. Because that hurts normal Americans and others. And so yeah, I think rates should be dramatically lower than where they are right now. I think it's absurd. But once again, there's a lot of factors at play, and I unfortunately I think most of it's probably politically driven, which is unfortunate. So, but yeah, what does
Okay.
that do to Bitcoin and crypto? Um, Listen, man. I mean, I think it's probably a positive. It's not a negative. I mean, there's a lot of people right now, who are thinking like Bitcoin and gold, work in tandem. I think gold is really built on the idea right now that inflation is going to continue and that it's continuing to rear its ugly head. I don't know. I'm not really a believer of that. If I Everywhere I look right now, inflation and the leading economic indicators of inflation are coming down, and not just a bit,
Yeah.
a lot. Like it's meaningful. So is that
Okay. Cool.
it's a long way to answer your question. I still think I kind of did the triangle of BS. It's like it could go up,
Yeah.
could go down. I don't know. Yeah, who knows?
Well, you don't know. That's the beauty of it, But I mean, if it drops, I don't mind it. I buy low and sell high. So sorry, that's
Sure,
kind of the
sure.
banker. That's the banker son thinking in me. But anyway,
Okay.
another question with regards to the US. You guys currently have a funny story, I should call it. Funny story going on back at your place. So what's going on actually? Is the government shut down? Is it
In
in
the
place
U.S.,
again? What exactly happened? Do you guys like
um,
even know what's going on? So and how does that affect you? As a company as well. Does it have
it
any
does affect
effect
us
on
at
you?
all.
Or
No, I mean, I think it's never a good thing,
Mhm.
and you know, it's never good when both sides of the aisle can't meet somewhere in the middle. But that's been the story for a long time now. And so I look at President Trump. I mean, look, it's always about the art of the deal for that guy. Is he getting what he wants here? Absolutely. Um, and I think I think there's a great value to that because that's the kind of stuff that we would like to kind of see get rectified and not happen again. Because markets hate uncertainty, right? And so does everybody else.
Oh yeah.
So and I hate seeing the fact that company or groups like the SEC and the CFTC are they're on skeleton crews now. That doesn't help. And these poor government workers, basically I mean, working without pay. I mean, that's a bad place to be, right? Um, I really hope it's short term, and I hope they're able to work out, a deal which is beneficial to both sides. But yes, it's terrible. I mean, it's awful. This kind of outcome, and you really do just. I think the last time it happened was in 2019. It was a short little stint as well. I'm hopeful that this is a short little stint as well, man. So we'll see.
Yeah.
But yeah, it's not good.
Okay.
It sucks. Yeah, it
It's not
totally
good.
sucks.
Yeah. It obviously sucks because it hurts again the normal American person.
Everybody, man.
Which
Yeah, and it also hurts the processes. Like so. If, for example, if you are somebody working with the SEC on a project right now,
oh yeah,
you're
that sucks.
you're yeah. Well, you're in a hiatus right now, and you don't know when that's going to come out. Like when's it going to stop? And it's a real pain, man. So
Screw those guys. Sorry for my language, but screw those guys. Seriously. Um. Okay. One of the I wouldn't say last questions, but how does then also the private placement structure, especially like with you know Bitcoin ETFs or generally
yeah.
like some company structures, provide
Mhm.
advantage over like public structures? Like we have like BlackRock or with I don't know JP Morgan or whatever. All these kinds of
Sure,
guys, especially for investors. Investors like me and you, or everyday
sure,
investors like
sure.
the people. So
Yeah, so private placements are designed specifically for what they call QIBs or qualified institutional buyers. It's a
mhm,
very bespoke, institutionally designed product, right? It's really not available to retail.
yeah,
There's specific goalposts around that, which are relegated by the Securities Act of 1940, by other things like the 4A2 program in the U.S., the 144As. Like I said, it's a very different. It's a different investor category of investor and different outlook, and everything about it is very different in a prepackaged product like an ETF. I think ETFs are fine, as long as you know where the leverage is, and as long as for example, in the options market, the Options Clearing Corporation is really managing that in a good way. Um,
Yep.
like I said, in the OTC option space, you have no idea who your counterparty is and whether or not they're going to be there. And so, our product is designed for, think about, a pension fund.
Yeah,
And,
exactly.
like a pension fund or a life insurer, somebody who is familiar with this specific structure because they've been doing it, for their whole career because they're institutions. And, who then in turn manage money for, mom and pop type investors, policyholders, all that kind of stuff, pensioners. That's the category that we're kind of looking for. But more important than that, it's for the treasury, the larger treasury that says, you know what, I can differentiate myself by having the first fully hedged treasury. I'm not going to seek alpha because my premise is that CAGRs on BTC are going to grow going forward, or Ethereum or Solana. It's going to continue to get to go, but I'm gonna give up some return to be differentiated in a way that no one else is doing. Most of these guys, I mean, almost all of them. In fact, I haven't found one yet out of almost 200, treasuries in the States and Canada. They, none of them are looking at hedging and downside protection. They're all focused on beating each other, on staking, on lending, on all these other things. And so that's, like I said, it's different. And to that end, it's like, okay, you're staking your Ethereum or your Solana. You're making a few points a year, but you're still under a corporate structure. So you're still paying for listing fees. You're still paying for auditing. You're still paying for all of these things that cannibalize and eat up some of that return. So it's not
Hmm.
real in the sense that, people could do it on their own and do better. But do people want to do that, or do they want to buy the treasury structure and hope and pray that MNAVs are going to be greater than 1x? Because, that's the thing. But, I would ask your listeners, because, you guys are really smart people. I mean, have a look at the income statements and the balance sheet and the lending structure of something like a MicroStrategy, and and
Yep.
and explain to me what happens if things go steady state for a while. When you have that lending rate and your credit rating, I mean, you're not really rated anymore. You hit triple C now. Now, Lord knows what it's going to be. But explain to me now how that amount of lending is actually going to lead to alpha going forward, and especially if BTC has a steady state, kind of arena,
Yeah.
or if it drops. What happens when that MNAV goes negative, or below 1x? Then
Exactly.
explain to me how that works, because I heard the story. It doesn't work, to me at least, but maybe I'm missing something. I mean, like I said, I'm definitely not the smartest guy in the room, and to that end, I would let your listeners are, you guys know this stuff very well, so I would say, dig in and come back to me. I would love to hear about it, because if I'm wrong, I want to know, but I don't know how the philosophy works, especially when lending dries up.
I mean, are you really wrong in saying that what happens if the market drops? Well, we don't know if the market drops. I mean, we don't even know if a war starts like the next day,
Right, right.
that can
Yeah,
always happen. I mean,
yeah. Just
look at the situation.
yeah, it's true. Sorry,
Just
Janice, I interrupted you, but
no, no,
yeah,
no worries, no worries. But look at the situation that happened after when Powell lowered the rates. Everyone thought Bitcoin's gonna shoot like skyrocket like into the moon. Well, it
right,
didn't. It actually dropped. And Nasdaq was actually shooting like to new all time highs. So
right. Yeah, yeah. It's interesting how that works, but I'm more interested in, okay, what's driving these treasuries, and so explain to me how the dilution, conversions, and the interest rates and the yields being paid. I mean, explain to me how that business model works. I think it works when BTC is always going up. I don't think it
yeah,
works when you have other factors kick into play, like an oversupply of treasuries, a fallback in the price, a slowdown in lending, and conversions that start to happen and kick the heck out of the equity structure. That's the thing. And so, once again, I heard the story myself live, and like I said, I walked out thinking Lehman, 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 or Bear
Oh
Stearns,
yeah.
Bear Stearns, that kind of shit, which is really bad, I think.
Yeah. Well, we never know. Well, I mean, we kind of have a good feeling about it, but you never know truly. So my
Yeah.
last question then
Listen,
for you is,
I don't
oh,
know.
sorry, yeah,
If I see that environment, I'm still going to buy BTC. I'm still going
yeah,
to
of
go long
course,
crypto. But I don't really know what is going to happen out of this. And there are some warning signs, danger signals for sure. And so, but they've been there all along, in one way or another. I mean, FTX was prime example of insanity, right? Um,
exactly.
and so to that end, I would say if I was a smart steward of my investors' money or my shareholders, my policyholder, whoever, I would only do this if I was hedged. And I would want a hedge that's actually collateralized, that has no counterparty risk. And so that's the only way I would do it personally. But
And
hopefully, yeah,
yeah, yeah, and the whole thing also with Mike Casario is, I mean, the same happened with FTX. Everyone loved the guy from FTX, and then when they realized that he was a dick, sorry for saying like that,
yeah, 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 yeah.
they all hated him, And same with Mike Casario. Everyone loves him. Everyone praises him as this god figure. What happens if he actually fucks up?
Right, dude.
Then everyone will hate him again.
That's it. Yeah. And so then that doesn't only shit the bed of MicroStrategy, that shits the bed of every treasury, because
Oh
that
yeah,
cascade effect is huge. Then you end up with MNAVs below one. You end up with shareholders, stockholder burdens. You're essentially fucked at that point. And you have to sell
oh
your
yeah,
treasury. You got to just blow it out. And that once again, that's going to be a bad thing for the underlying.
yeah,
But it's not going to be forever. It's a short-lived thing where you have a massive amount of supply shock the market and everything that goes along with that. But if you're hedged, what do you care, man? You're still going long. You're still capturing the upside if you're wrong.
yeah,
But at least you're covering. It's like cover your ass type stuff. So
yeah.
I mean, who knows, man? I like once again, I'm not taking a view on it other than the fact that hey, we have a service that helps.
Yeah, I think you shouldn't also really take a view on it. It doesn't matter what you say. You're always going to be the idiot,
Man, I'm always going to be
at the
wrong.
end of the day.
I'm rarely
Yeah,
going to be right. And if I am right, then it's like, oh man, this sucks. This is like
yeah.
really,
So, so,
yeah,
two more questions before we're gonna end the episode. The first
yeah, sure,
one
man.
for you would be, how do you guys at DelphX like what are your goals for like the next year and or generally like for Q3 now? We're in Q3 now, yeah. For
Q4.
Q3, what are your goals and main
Going
focus
into
on?
Q4. Yeah, we're going into
Oh,
Q4. So actually, we
Q4.
are
Sorry.
right now. That's okay. Yeah. So our goals for for the next, I would say for the next, I'm going to keep it 6 and 12 months. It's about the same.
Okay.
Is basically adoption of our product,
Hmm.
alignment with others, to further develop the product to other things like tokenization, etc. When that comes, and development of new products, but also for us internally as a company to have revenues kick in on the back of this product. So we do think that's going to be this month, and that will change the nature of our company in a big way. But once again, it's forming strong partnerships, launching our product, advancing the product too, through partnerships and through our own sales channels and others. But then as well, developing new things, new products in this, in this sphere. And then at some point on the back of that, our insurance product will take off too. And that's the credit market product that I was talking about. So we really want to become basically a revenue behemoth and
Hmm.
operate within the goalposts of like where we've got everything now, and really advance on that front. But then build technologies on the back of it. So we have first market mover advantage on our products, um, but we know after spending years with lawyers, like the big securities lawyers in the world, and of course getting
Yeah.
essentially pillaged out of millions and millions of dollars for nothing in the end, um, and time delays, etc. We kind of have a 2-year head start on everybody, which is great. But look, man, we're offering a service that no one else is at this stage, and we think we think that alone as a standalone is exciting, and I can definitely share that right now we've got such a great reception to our product. It's awesome. other than the fact that there are some naysayers out there who say, I'll just still use OTC options or something else like that, which is fine. I mean, look, there's always another flavor of ice cream in the store, you know? I mean, some people might like chocolate and vanilla. Well, we got strawberry, you know, like that's the kind of thing. And there's always room for more because it's such a big space.
That should be your catch slogan. You like chocolate and vanilla, we like strawberry, you know? So
Yeah. You know, it actually came from one of our old advisors back in the way. I did not develop that. So I give all credit to him
okay,
for saying, you know, he was right. Yeah.
So then the last more question I have for you, the one more question and the last question I have for you, sorry. Where can people find you guys then, social media wise, website wise, and where can also
Sure.
people find you,
Yeah.
Patrick?
So we're on X at DelphX, so DelphX. We just kind of reignited that channel because we were off socials for a long time. But they can always go to our website too, and it's DelphX.com. Find out about us, contact us through there. I'm, you know, like I said, we've got a great team and a great group of people, you know, working for the company, and yeah, people can always find out about us there. But obviously, you know, you can check us out on the news. You know, if you go to, I think our symbol in the US is DPXCF, and we're on the OTC QB. And then in Canada, it's DELX. But yeah, follow us, drop us a line. But obviously, you know, keep in touch with our press releases as they come out, which they'll be coming out in short order. So.
Okay. And where can people find you, Patrick?
Oh yeah, I beg your pardon. Sorry.
Where can people find you, social media wise? And
social media. I'm not on social media. Yeah, I stay off of it. Unfortunately,
okay.
I think I have a LinkedIn thing going on, but it's not managed by me. But
Okay.
I know I do anything. Yeah, I just, hey, once again, I told you I'm one of those old losers. Okay, who's like I'm still living in the '70s, man. You know, like the '70s.
Maybe it's better to be off of social media. To be honest, I realized that like a couple of times.
You hear the stories. I'm sure I have people chasing me too that I don't want them to have to find me. So you never know, right?
But yeah, you never know.
Who knows? Where the old psycho ex-girlfriend might kind of dig you up and kind of chase you.
Dude, don't mention it, please. Don't mention it, dude.
Who knows,
but
man?
Yeah. Anyways, moving on. So dear people, that was another episode of Nomad Podcast. I hope you enjoyed it. I hope it wasn't too much information. And dear Patrick, thank you for joining me today. And dear people, thank you for listening as always.
Thank you for having me, mate. Good spending time with you. Thank you.
Thank you. Bye.
Nomad Podcast.